Hey you guys, this is Uncle P from Super Easy Forex, and let me slide this over a bit. This is exactly why I tell you guys don't ever take trades when the market first open. Look at these spreads. This is what you guys don't pay attention to. Look, you're using a 10 pip stop loss, but look at the spreads. This one just was at 26 pips. Now it's slowing down. It's about 25 minutes after the market open. Look, it just jumped to 19 pips. You see this difference right here? See? This is called the bid-ask spread. So if you enter, and this is my live account, but I'm going to take a penny trade so you can see what I'm saying. So when you enter a trade, okay, and I'm just going to take a penny so you guys can see it. Not no standards. Let me change that. I'm going to take a penny trade, and let's just say I'm going to sell it, okay? First of all, okay, do you see, here's where the actual price action is. But look at where they got me in at. See, they get you in at the bid-ask spread. This is the bid. This is what you're asking to pay for it. And notice that now I'm down by 15 pips right off the top by entering this trade because I got in at the market open. And this happens every single day. And this is why a lot of you guys are also losing. Number two, let me open up these candles so you guys can see this. Look at the weekend gap. You see this space right here? This is called your weekend gap. And so some of you guys, you're just killing your accounts before you get started because you're making these silly mistakes. You're not paying for education. You're scouring the internet to try to find free indicators. See, look at that. 23 pips now. 23 pips. Now, when this thing settles out and actually really resumes, the spreads are only like 3 pips or something like that. But because you're jumping in as soon as the market opens, which happens every day, 5 p.m. Eastern Standard Time, the new market day starts. So this happens every day. And this is not the market. This is your own broker. They're making money off your suckering. They're suckering you because some of you guys are just too hasty. Look at this. 16 pips. See, this is where you're getting in at. You put in a 10 pip stop loss. You can clearly see why you're losing. Look at the spread. Let me go to another pair. Now, this one was way up. Now it's down to 8. See, the longer you wait, it settles out. Now it's down to 8 pips. Now this one is down to 6. Look at that, 15 pip spread. Plus you have your weekend gap. You see how this happens? 8 pip spreads. Let's take a look at the euro. Now, the euro then comforted out. It started out big, but now it's back to normal, which is 1 or 2 pips. But you see how, look at this, 10 pip spreads. This is crazy. 13 pip spreads. That's not normal, but that's what you guys do. You jump in because you're in a hurry. See, this one going back to normal is about 3 pips. 15 pips on the GBP UAD. I'm showing you guys this so you can see. Look at that spread. 26 pip spread. Do you see this? Look with your own eyes. This is why you're losing. Look at this. This is where if I get in on a penny trade, and this is a live account again, so I'm not taking big trades on this. Because again, right here, see, live account. So I'm not going to take big trades on this. I'm just going to take a penny trade on my own account to help you guys understand why I'm telling you stop being the fool. So let's just say I want to buy it or sell it. Okay. It doesn't matter. All right. So I'm a sell, you know, let's just say, let me take a look at it. What direction would people normally do? Okay. Let's shrink these candles and kind of see, okay, so they say it's way up here. So let's go ahead and sell it. Okay. So now you can see 20 pip spread. Watch what happens. Okay, watch where they get me in at. The red line is where the actual price action is. The white line is where you're going to get in at. So when I sell this thing, boom, I'm in the trade now, right? Look at where they put me at, way down here. But now I got to make up, just to make up ground, I have to this red line has to move below my entry for a sale by 20 pips just to break even. I got to have this drop down by 20 pips just to break even because I just paid the broker 20 pips to enter the trade. So if I had a 10 pip stop loss and I'm entering this trade, you can clearly see, look, now it just jumped to 26 pips. And that's ridiculous because if you would have waited for a little while, you'll see that this is going to actually go back to normal, which is around 5 pips, 3 pips, whatever. Matter of fact, what I'm going to do, so you guys can learn what I'm trying to teach. This is why you paid to come to my class. This alone will save, look at that, 32 pips. Look at how it's jumping around. Now it dropped down to 19 pips. You see what I'm saying? Do you see this with your own eyes? Okay? See it with your own eyes. And today is January 17th. Okay? The market just opened about 30 minutes ago. This is why you wait. Look at how it just jumped back to 30 pips. You see this? So if I go down to stretch these candles out, where now you can clearly see the difference. See? The bid-ask spread. Okay? This is the bid price, this is the asking price, or vice versa, whatever. It doesn't matter. The point is that this gap is why your accounts are getting killed on Sundays. See, it just jumped back to 32 pips. So I'm going to pause this and I'm going to come back about an hour or two from now and watch how these spreads have changed. I want you guys to see this for yourself. This is why you paid to come to Super Easy class. And it's a free class when you purchase the Simplicity system. I'll teach you all this stuff. And this one lesson alone will save hundreds of dollars for some of you guys who've been losing so many trades after all this time because nobody taught you this stuff. Okay, so I'm going to pause this and then I'll come back later on and you'll see that this is a very same trade. And again, today is January 17th. Okay, it's the 17th, Sunday. The market just opened. I'm going to come back in about an hour or two, and then we're going to go right back to this. And I'm not looking for a winner or a loser. I just took a trade just for the sake of taking the trade. But I'm showing you how the spreads are killing your account before you can even worry about price action itself. So we're going to check back on these spreads in about an hour or two, and you'll see if you will have simply waited, like Uncle P says all the time. Don't ever take trades at the beginning of an opening of the trading day, which happens at 5 p.m. Eastern Standard Time. Don't ever do that because look at that, 37 pips. You just seen it. It was at 20 pips. And see, that's the point. They get you in, you get in, you put your stop loss, you say, okay, I'm going to put it right above there, and then boom, they hit you. 32 pips. It just jumped from 20 to 32. That's 12 pips in seconds. While we're talking, this is happening right in front of you. I can't make this up. It's literally happening right in front. So even if you said, okay, I'm going to put my stop loss above this high, look at what they just did. They jumped the spread up and just took out people's stop losses. Well, I'm going to put my stop loss above this high. Look at how they knocked it out. The price itself never budged. Notice the price is still sitting here, but notice how they took your stop loss out with the spread. The broker took you out. Your own broker. Okay? Jeez, I'm telling you guys, stop doing this stuff. Stop. So I'm going to pause this and then we'll come back. Okay. Okay. So you guys remember I told you it was about 30 minutes after the market opened. So now the market has been open an hour and some change, an hour and 10 minutes. So look at what happened just by you simply waiting and being patient. Can you now see where the spread is on exactly the same pair? Now, notice where it is where I got in now. I'm going to get this trade in right here just to show you an example of it just by simply being patient and wait. Look, now it's down to the 5s and the 6s, which is still high. You know, if I wait a little bit longer, but I'm heading out the door, so I want to kind of show y'all this. But look at where it was at 30 pips, 26 pips. Now I just waited 30 minutes or so, and now watch. I'm going to get into the same trade. And look at where I'm in at now. Why? Because the bid-ask spread is now smaller. See, look, 5 pips now, which is normal for this pair. 3 to 5 pips is normal. But when I got in earlier, this is why, and price really didn't do anything. It was just that, see, the spreads got me in way down here, and the price action was up here. But your broker took your money because you got in down here because they opened up them spreads. So now that I'm getting in simply by waiting an hour or two after the market has opened, look at how you're saving losses. Let me go to the other one that I was in. That was the Euro NZD. Now look at the spread. Remember that was like 15 pips or something like that? You can play this back, scoot it back out. It's about 30 or 40 minutes later from when I first recorded it. But now look at the spreads. They're only 4 or 5 pips. So now if I got into this one again, now you'll see that my actual price will be more in line. See? So from here to here, look at how much I saved on this trade just by waiting to get in. From here to here, that's 7 pips. Okay? That unwasted pips. And let's look at this one, which was the bigger one. From here to here, that's 23 pips that I saved. Hit if I would have waited. And this is how the broker is killing y'all's accounts, because I keep telling y'all, don't take trades when the market first opens. Now you're seeing live proof as to why I'm saying that. The whole body of this candle basically is fitting in here. You gave away 20-something pips because you were too hasty in a rush to get into a trade as soon as the market opened, which is such an amateur move. Same thing here. Amateur move. In the stock market, they actually have the same thing, but they call it amateur hour. That's what they call it in the stock market. Dumb money, amateur hour. Because amateurs get in as soon as the market open. Those who trade and been, you know, the OGs in the market, they know don't pull that bull crap because you're going to get your money taken by your own broker. Now you see it live. Okay? All right. So sign up for the class and come and join me so I can teach you more of this stuff. If not, at least you learn something. Okay? Thanks.